everyone and welcome back to my channel. Today I'm going to share with you 4 best dividend growth stocks to buy right now. Alright, but before we get into it, if you are new here, don't forget to subscribe to my channel and ring the notification bell so you never miss any of my videos. With that, let's jump right in. Okay, the first stock on our list is Singapore Exchange. Okay, SGX probably needs no introduction as the monopoly stock exchange in Singapore. It also functions as a pivotal marketplace for an area of financial assets, including equities, fixed income securities, derivatives, and commodities. Okay, for the financial year ended June 2023, SGX reported revenue increase by 8.7% to $1.1 billion, while adjusted net profit is up 10% to 503 million. So you can see that they have an incredible net profit margin over here. And from the dividends chart, you can see that it paid out 16.5 cents for the second half of the financial year. So if you were to include another 16 cents for the first half, the total dividends per share comes up to 32.5 cents. Okay, this is a steady increase from 28 cents in FY 2014, and it also marks how SGX has been giving out consistent dividends for the last 10 years. SGX also recently announced a new structure in a bid to enhance the strengths of the multi-asset offerings and increase the growth opportunities globally. So some of these measures include like the proposal to expand beyond FX futures to include FX tech and workflow solutions, and also to build on the IH, the proposition in driving the AUM growth in structured products and ETFs. So Mr. Loh Boon Chai, right, CEO of SGX, said that the new structure would enable SGX to capitalize on the immense growth opportunities from the rising capital flows into Asia. So when we have a lot of capital flow into Singapore, SGX will be able to tap on that. Okay, moving on to our second stock, we have UOB, okay, commonly known as one of Singapore's three leading local banks, together with DBS and OCBC. Alright, so UOB Group has reported a core net profit of 3.1 billion for the first half 2023, an increase of 53% year on year. Okay, and this is supported by the robust earnings growth across the diversified business franchises. Okay, you think about it, half a year, 3.1 billion net profit already. With that, right, the bank has declared an interim dividend of 85 cents per share, which is higher than the last year 2022 half year dividend of 60 cents per share. Okay, so if you take the trailing 12 months dividend per share of $1.60 and divided by the share price of 22 and 88 cents, UOB's dividend yield is coming in at an attractive 5.6%. On top of that, alright, UOB has consistently paid out dividends even during challenging times like COVID. And that's not all, alright? So because by acquiring Citibank's consumer business in 4 Asian markets, UOB now has a diversified regional presence and is also able to accelerate their growth targets by 5 years. And if you are worried about the acquisition cost, no worries, right? Because the acquisition is actually fully funded by the bank's excess capital, which means that their strong balance sheet is still well positioned to weather the economic storms and also continue rewarding you, the shareholders, with dividends payout. Before we move on to the third stock, do remember to give us a thumbs up and subscribe to our channel. As usual, in return, I will share with you a financial meme. Okay, our third pick here is a bit unique. Hoppa Corporation. You might not have heard of the name before, but you will probably be familiar with their most famous product, Tiger Balm. Okay, but Hoppa is not just on Tiger Balm because they have many other business segments as well, including the leisure business through the ownership of Underwater World Pattaya in Thailand itself, a property business in Singapore, and finally, the most gigantic one, the investments business through owning a stake in UOB, UOL, and UIC. So when you heard of this, you probably would have guessed that their management team are closely related. Okay, maybe even dragging into the long history. All right, so I'm not gonna touch on that. But the interesting is that most investors would regard Hoppa Corporation as a dividend growth gem. Why? Because they have been steadily increasing their dividends over the years. In fact, for the first time since 2018, Hoppa finally increased the interim dividend from 15 cents to 20 cents. All right, and this translates into a 33% jump. Given that the company is a net cash company and also receives recurring dividend income from the substantial investments in all the listed companies, Hoppa is well positioned to continue churning out cash flows for us income investors. The last stock on our list is none other than Conita Holdings. Okay, founded in 1972 by Mr. Anthony Lim. He is a humble watch salesman. Okay, and he loves luxury Swiss watches. So with that, with his passion, right, he has evolved Conita Holdings into a distributor and retailer of luxury watches like Rolex, Patek Philippe, and Tag Heuer. Okay, and today it has also grown from a single store family business to more than 28 outlets all over Asia. Talking about the results, all right, for the full year ending 31st March 2023, Konita reported an increase of 15% in revenue to 826 million, while net profit increased by 13% to 83.5 million. Not too shabby, right? And coming to the dividend history table again, we can see that Konita Watch typically just pays out an annual dividend in March after the financial year. And the total dividends have been increasing in the past decade as well. So another thing that we observe is that Konita tends to offer a base dividend payout of 2 cents, but will pay out a special dividend depending on how well the company has performed that year. For FY 2023, it paid out a final dividend of 2 cents and a special dividend of 14 cents, making it a total of 16 cents in dividends. So with that, right, the dividend yield comes up to a nice 4.6%. Wrap up. Okay, dividend growth stocks shine when we are all uncertain about the economy and with the upcoming, people are talking about recession and things like that. But in this video, I can only cover four of them in the essence of time. So if you are looking for more dividend growth stocks, such as the ones I've covered here, as well as high quality REITs that I've even not even talked about, okay, you can do two things right now. First one is to subscribe to our channel and hit the bell to be notified whenever I publish more of such videos. Okay, the second thing you can do is to join our Patreon membership here. Okay, as what I'm showing right now. Okay, this is what you will get right when you join us for this membership. Right, a 200,000 dividend growth model portfolio. Okay, we are currently adding the positions gradually, and in time to come, we want it to be a 10 REITs and 10 dividend growth stocks. So comprising of 20 positions to make up a 200,000 model portfolio. Okay, on top of that, we will be doing all the tedious legwork and hand to you the trade alerts and our best ideas as well as ongoing coverage on all these dividend growth stocks, okay, and all our model portfolio positions. So if you want to get access also to premium reports and priority access to any upcoming investor relation events. Okay, do remember to sign up for our membership, right? And also join other like-minded income investors as well. So I will be putting in the link in the description below. So just click on the link to join our Patreon membership today. Next up, don't forget to check out this video over here to know about the best retail REIT to put in your watch list. And I will see you soon. Thanks for watching and bye.